Assalamualaikum and hi, my name is Nur Aina Akmal and I will be presenting cash in the bank and transaction cycle. Before I start, do know that cash's susceptibility to theft and can be significantly misstated. So the highlight of this chapter is the linkage of cash in the bank to transaction cycles and describe substantive tests of the cash balance. As we can see from this group of ledger, we can see that the cash account play a very important role in audit, even though the final balance was immaterial. As the cash account is considered as a main account in financial statement, it will become larger or longer than any other account because there is a lot of cash inflow and cash outflow. So when auditing cash, the auditor must distinguish between verifying the client reconciliations of balance in the bank statement to the balance in general ledger and verifying whether recorded cash in general ledger reflect correctly with all cash transactions during that accounting year. So there is a few misstatements which may not be considered as a part of audit of bank reconciliation. So those that can be discovered as audit of sales and collection cycle instead of bank reconciliation statement is failure to bill a customer, for example like managing cash inflow and cash outflow, and embezzlement of cash received from customer, for example undocumented credit adjustment. So next is duplicate payment, improper payments of personal expenses and payment for raw material not received that can be discovered as audit of sales and collection cycle. So example for duplicate payments is such as overpayment of invoice and improper payments of personal expenses. Example is mistake in computing the payment. So another which may not be considered as a part of audit bank reconciliation is payment to employee, which payment to the employee for the hours they did not work, which can be discovered as audit of payroll and personal payment. And next is payment of excessive interest to related party, which can be discovered as audit of capital acquisition and repayment cycle. There is also misstatement that can be discovered as part of test of bank reconciliation, which is failure to include check on the outstanding checklist. For example, that a check that has not cleared but it was recorded in the cash disbursement journal. And next is cash received by the client recorded in the wrong period, where the check received in the balance sheet date but it was recorded in the current date. So next is deposit was recorded near year end, but it was deposited in the bank in the same month, and it was included in the bank reconciliation as a deposit in transit. So next, lastly, is payments on note payables debited directly to the bank balance, but was not recorded in the client record. So that's all from me, and I will pass to the next presenter, Nur Faridat.
Thank you to Aina Akmal. Next, I will present about the types of cash account. There are 5 types of cash account that commonly used by most companies, which are general cash account, impress payroll account, branch bank account, impress petty cash fund, and also cash equivalent. So I will start with the first type of cash account, which is general cash account. What is general cash account? The general cash account is the focal point of cash for most organizations because this is the principal cash account that used by organization for cash receipt. For example, is revenue process and cash disbursement such as payroll and purchasing process. All cash receipts normally are deposited in this account while cash disbursement are paid from this account. Next is impress payroll types of cash account. This type of account contains a stipulated amount of money and the account is used for limited purposes such as payroll and dividend check. When used for payroll, the total amount of the net payroll is drawn from the general account and the individual check are drawn from the impress cash account. The payroll account serves as a clearing account and maintain adequate control of the cash. As I explained before, a general cash account is like a money supply to other types of cash account, especially for cash receipt, revenue, and cash disbursement. In this case is general account provides some money to impress payroll account for disbursement. And the purpose of separate on the disbursement for payroll is to improve internal control over payroll disbursement. For the third types of cash account is a branch bank account. Branch bank account is used by company with branches in multiple locations. Each branch is able to pay local expenses and maintain a banking relationship in local community. It might take the shape of an interest account with specific amount deposit based on the cash report sent to the headquarters. In some companies, the deposit and disbursement for each branch are made to a main office general bank account. The branch account in this instance is much like a general account but at the branch level. Okay, number 4 is Impress Petty Cash Fund. Basically, Impress Petty Cash Fund is not a bank account, but it is sufficiently similar to cash in the bank to the merit inclusion. Impress Petty Cash fund refers to a type of cash account maintained by a company used to pay for small incidental or routine expenses. It is used for small cash acquisition that can be paid more conveniently and quickly by cash such as minor office supplies, stamps and employee meals. The amount of money in petty cash account is usually not exceed a few $100 and reimbursed only once or twice a month. Okay, last type of cash account is cash equivalent. Companies often invest excess cash accumulated during certain parts of the operating cycle that will be needed in the reasonably near future in short-term and highly liquid cash equivalents. Okay, this may be include term deposit, certificate of deposit and money market funds. Cash equivalent, which can be highly material, are included in the financial statement as part of the cash account if there are short-term investments that are readily convertible to non-amount of cash. And there is insignificant risk of a change value from interest rate changes. Okay, cash equivalents are investments that can readily be converted into cash. The investment must be short-term, usually with a maximum investment duration of 3 months or less. If an investment matures in more than 3 months, it should be classified as other investment. Cash equivalent should be highly liquid and easily sold on the market, and the buyers of this investment should be easily accessible. Last for this part, which is type of cash account, is this figure. This figure shows the relationship of general cash to the other account. All cash either originates from or is deposited in general cash. The focus on auditing is only for 3 types of account, which are general cash account, impress payroll account, and impress petty cash. Okay, that's all from me for types of cash account. I will pass to the next presenter, which is Shafiqah.
Thank you to Faridatul. Next, I will explain methodology for designing tests of detailed balances for cash in the bank. So basically, when we discuss about test of detailed balance, we need to test the year-end balance in general cash account. With that, the auditor must accumulate sufficient appropriate evidence to evaluate whether cash as stated on the balance sheet is fairly stated and properly disclosed in accordance with 5 of the 8 balance-related audit objectives used for all tests of detailed balance. So, before we go further, let's recall together what are the 5 balance-related audit objectives used for all tests of detailed balance. First is existence. Second is completeness. Third is accuracy. Fourth is cut off. And lastly is detail tie-in. So, in methodology for designing test of detailed balance for cash in the bank, there are 3 phases.
I will explain phase 1, while phase 2 and phase 3 will be explaining by Liana. So, next, as referred to the slide, in phase 1, there are 3 methodologies for designing tests of detailed balances for cash, which are identify business risk affecting cash in bank. Second, set tolerable misstatement and assess inherent risk for cash in bank. And lastly, assess control risk for several cycles. So, for assess control risk, it has been divided into 2 categories, which are control over transaction cycle affecting the recording of cash receipt and disbursement, and secondly, independent bank reconciliation, which I will explain more about this later. Now, let's discuss a little bit detail about the 3 methodologies for designing tests of detailed balance that I have mentioned. Firstly is the auditor need to identify the client risk affecting cash in bank. This indicates that the auditor need to identify the risk which may affect the cash. So, the big question here, how the risk may arise? Basically, the risk may arise from inappropriate cash management policies or handling of fund in trust for others. So, actually, trust fund is a legal entity that allow hold property on behalf of individual or group. So, the person who give the trust or create the trust, we call it as guarantor, while the person who receive the benefit, we call it as beneficiary. So, when the client having problem in this situation, this may lead to the business risk. Other than that, client business risk is more likely to arise from cash equivalent and other type of investment. Several financial service firms have suffered large trading losses from activities of individual traders that were hidden by misstating investment and cash balances. Therefore, the auditor need to understand the risk from the client investment policies and strategy as well as the management control in order to mitigate the risk. So, settle the first point, we move on to the second point, which is the auditor need to set tolerable misstatement and assess inherent risk. Usually, cash balances is not material on many audit. However, cash transaction affecting the cash balances are highly material. Therefore, the potential often exists for material misstatement of cash. If we think logically, this is because the cash is more exposed to theft compared to other assets. So, there is a high inherent risk for existence, completeness, and accuracy objective. Lastly, we will discuss about access control risk, which has been categorized into 2 categories, which are control over transaction cycle affecting the recording of cash receipt and disbursement, and secondly, independent bank reconciliation. So, for the over transaction cycles affecting the recording of cash receipt and disbursement, the auditor has to look whether the client has adequate segregation of duty between the check signing and account payable function. Next, the auditor also need to check whether the signing of check is performed by properly authorized person or not. Besides, the auditor must also examine whether the client used pre-numbered check or not. So, it may be saying that if the control affecting cash-related transactions are operating effectively, control risk is reduced as the audit test for the year-end bank reconciliation. Next, for the independent bank reconciliation, the auditor will check whether the client has issued bank reconciliation on monthly or not. And for the client who has significant cash balances and large volume of cash transaction for the reconciliation, it may be on the daily basis. If the client does not meet or does not do as required, it shows that the client has a poor internal control, and this may affect the auditor assessment on control risk for cash. Next, the auditor must ensure the accounting records reflect the same cash balance as the actual amount of cash in the bank after reconsidering reconciliation item. This is very important because by doing this, the auditor may find or trace any error earlier or if there is any asset misleading. Lastly, the control is enhanced when the qualified employee review the monthly bank reconciliation soon after the completion. So I think that's all from me. Thank you. I pass to the next presenter.
Assalamualaikum and a very good day. My name is Nuriana Izzati binti Basir and I will continue explaining about the methodology for designing tests of balances for cash in the bank. Methodology for designing tests of balances for cash in the bank for phase 2 is designing and performing the test of control and also the substantive test of transaction for several cycles. The test of the reasonableness of the cash balance by using the analytical procedure is considered as less important than for most other audit areas, as the year-end bank reconciliation is audited thoroughly in many audits. Next, as for the methodology for designing tests of balances for cash in the bank for phase 3, it is divided into two. The first one is designing and performing the analytical procedure for cash in bank. The auditor will compare the ending balance in the bank reconciliation, deposit in transit, outstanding checks, and other reconciling items with the previous year reconciliation. The auditor also will compare the ending balance in cash with previous month's balances, which allow the auditor to detect any misstatement in the cash. The second one is designing tests of cash in bank in order to satisfy the balance-related audit objective. The auditor will perform the audit procedures and also determine the sample size, item to select, and also the timing. As for the verification of the balance in the bank account, the auditor will firstly obtain the bank reconciliation from the client. The bank reconciliation will be included in the auditor's documentation, and the auditor also needs to ensure that the client has made adjustment if the balances are material. Next, the auditor must verify whether the bank reconciliation received is correct. Most important objectives are existence, completeness, and also accuracy. So the auditor will have to pay extra attention on this objective to ensure that it is being fulfilled. Lastly, the auditor will perform tests related to the 4 presentation and also disclosure objective, such as reviewing the minutes and also the loan agreements in order to determine if there are any restrictions on the cash that must be disclosed. The next slide is for the cash balance related audit objective. As for the cash balance related audit objective,
There are 5 objectives listed, which are detail tie-in, existence, completeness, accuracy, and also cut-off. For detail tie-in, the auditor needs to make sure that the cash in the bank puts correctly and agrees with the general ledger, and the tests are done only on the bank reconciliation with the reference of the general ledger. While for the existence, the cash in the bank, as stated on the reconciliation, must exist. Next, for the completeness, the existing cash in the bank must be recorded. And for the accuracy, the cash in the bank, as stated on the reconciliation, must be accurate. For the existence, accuracy, and also the completeness, these are the important objectives for the cash in the bank. Lastly, for cut-off, the cash receipt and also cash disbursement transactions are recorded in the proper period. For the last slide that I will explain, the figure shown is the audit schedule for a bank reconciliation. We can see that at the bottom of the figure, the balance is adjusted based on the general ledger, and this balance will appear in the financial statement. The client must make the adjustment when the amount is material, and the auditor must ensure that the client made the adjustment and include the bank reconciliation as part of the auditor's documentation as an evidence. That's all from me. I will pass to the next presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. So my name is Muhammad Karim Kwan, going to present of the procedures of how we're going to auditing the cash account. So there are the following 3 procedures that will merit additional discussion because of their importance and their complexity. So the first one we see is a receipt of a bank confirmation. Next, receipt of a cut-off bank statement. And the last one, you have to do the test of the bank reconciliation. So for the bank confirmation, what is bank confirmation? Auditors usually obtain a direct receipt of a confirmation from every bank or other financial institution with which the client does their business, except when there is an unusual large number of inactive accounts. Actually, the receipt of the bank confirmation are not required under the auditing standards, but we can take it as a precaution and other additional procedures in confirming our cash account. As a convenience to the auditors as well to the bankers who are required to fill out the bank confirmation, the AICPA has already approved the use of a standard bank confirmation form. The standard of a bank confirmation form actually can ease the effort of the auditor in requesting the bank confirmation from the bankers. Next, the importance of the bank statement in the auditing is actually it can extend and beyond the verifications of the actual cash balance. So by having the bank confirmation, we as the auditors can extend our verification and the validity for determine the actual cash balance from the client. Alright, next, we also can obtain the information on the liabilities itself from the bank for notes, mortgage or other debt. Typically, include the amount of the date of the loan due date, the interest rate, and the existence of the collateral itself. Next, for the cut-off bank statement. So, first, what is a cut-off bank statement? So, we can define as a cut-off bank statement actually a partial period bank statement and the copies of the cancelled checks, duplicate deposit slips, and other documents that included in the bank statement mailed by the bank directly to CPA office. So what is the purpose of the cut-off actually? Cut-off is to verify the reconciling items with the client year-end bank reconciliation with evidence not accessible to the client. To fulfill the purpose of the current bank statement, usually the auditor will request the client to have the bank provide directly to the auditor a partial period statement, or they can have other digital access to the information in about 7 to 10 days subsequent to the balance or the sheet date. Obviously, this test is for the intentional misstatements. The auditors perform the following verification in the months subsequent to the balance sheet dates. The first one, the auditor will put the list of all cancelled checks, debit memos, deposit, and the credit memos. Next, the auditor will verify that the bank statement balance when the totals are used. Next, the auditor will review the items included in the footing to make sure that they can cancelled by the bank in the proper period and do not include any erasure or alteration. Next, proceed to the bank reconciliation, which is the last step of procedure in determining and auditing the cash account. So the bank reconciliation itself is actually a verification that the client bank reconciliation is mathematically accurate. Entries, checks, written and recorded before year end and included with the cut-off bank statement to the list of outstanding checks on the bank reconciliation, to the cash disbursement journal, and the deposits in transit can also be verified by the reference to the cut-off bank statement. So, proceed to the bank reconciliations. Bank reconciliation recorded every transaction that we have made from the cut-off statement previous. So the bank reconciliation itself actually is the last step or the last procedure before we can justify the client cash account. So, in verifying the reconciliation, the auditor can use the information available to the auditor through online access to the client itself from the client account provided by the bank in the cut-off bank statement to verify the appropriateness of cross-selling items. The auditor verification of the reconciliation involves the several procedures, such as verify that the client bank reconciliation is mathematically accurate, and the auditor also will trace the balance of the bank information audited and the beginning balance shown on the online client banking records or the cut-off statement. With this verification, the client can justify their correct decision of their client. So, this is the formula that we can use in justify our procedure. We have to remember there's procedures that can allow the auditor to obtain sufficient appropriate evidence. The first, the auditor should have the test of control interaction cycles. Next, they have to perform test of controls over bank reconciliation process. Next, they have the substantive test of transactions, which is AUDIT. Next, the auditor have to perform analytical procedures. Next, the last one, the auditor have to test on the detailed balance. And therefore, with all this efficient auditing procedures, the auditors can have a sufficient appropriate evidence to perform an auditing to their client. Okay, that's all. Thank you.
Assalamualaikum. My name is Afif Dinal. I will explain about proof of cash. What is proof of cash? Proof of cash is a 4-column audit schedule that is prepared by auditor to reconcile bank record of client beginning balance, cash deposit, clear check, and ending balance for the period with client record. So sometimes the auditor will prepare proof of cash when they think the client has material internal control witnesses in cash. So the auditor use a proof of cash to determine whether the following were done by the client. So the first one is all recorded cash receipt were deposited. Second is all deposit in the bank were recorded in the accounting record. The third is all recorded cash disbursement were paid by the bank. And the last one is all amount that were paid by the bank were recorded. A proof of cash also include the following for reconciliation tests, which is the first one, reconcile the balance on the bank statement with general ledger balance at the beginning of proof of cash period. The second one is reconcile the cash receipt deposited per the bank with receipt recorded in the cash receipt journal for a given period. The third one is electronic payment and cancel check clearing the bank with those recorded in the cash disbursement journal for a given period. And the last one is the balance on the bank statement with the general ledger balance at the end of the proof of cash period. This is the example of proof of cash. In this example, the auditor focus is on reconciling the amount recorded in the books with the amount included in the bank statement, whereby the auditor start from per bank statement until to trace the journal entry correcting error. Proof of cash is an excellent method to use, but it is not effective to discover things like fraudulent check, check written with improper amount, and other misstatement on cash disbursement, which is led to fraud like kiting, which is a fraudulent that uses check to embezzle money. Kiting is a transferring money from one bank to another and incorrectly recording the transaction. So what the embezzler do is at the near balance sheet date, a check is drawn on one bank and immediately deposited in a second account for credit before the end of the accounting period. So the embezzler will carefully make sure the check is deposited at late enough date so that it does not clear the first bank until after the end of period. This fraud can be done by bookkeeper if they have access to the perform check. To access to the check, perform the bank reconciliation, and also they can record the check in the accounting system. So if they have three of this, they can do fraud. So the next one, yes, kiting is obviously an illegal practice because it concealed by exploiting the required for a check to clear. The perpetrator also deposit and drawing check between account at two or more bank and thereby taking advantage of the float. Then they will fraudulently altering the figure on a check to increase its face value. So this is the example of schedule of interbank transfer. There are 7 things that auditor will check in case of they think there is a misstatement in the interbank transfer. So I will end my session here. Thank you.
My name is Muhammad Akib Mazadi. Okay, I want to continue what Afif Daniel present. Okay, several things should be audited. First, the accuracy of information on the interbank transfer schedule should be verified. The auditor must compare the dates on schedule with the bank statement and also examine cash disbursement and cash receipt. Secondly, the interbank transfer must be recorded on both banks, which is the receiving bank and the disbursing bank. If only in one bank record, it can be lead to cash thief. And the third, the date of the recording of the disbursement and receipt for each transfer must be in the same fiscal year. Cash shortage can happen if a cash receipt was recorded in the current fiscal year while disbursement in the subsequent fiscal year. For the fourth point, disbursement on the interbank transfer schedule should be correct, include in or exclude from year end bank reconciliation as outstanding check. And lastly, receipt on the interbank transfer schedule should be correctly included in or excluded from year-end bank reconciliation as deposit in transit. For Objective 5, we will discuss about Impress Payroll Bank Account. Before I explain more about the payroll bank account, I want to recall back for the chapter 20, which is we will learn about the payroll bank account. So, what is Impress Payroll Bank Account? So, Impress Payroll Bank Account is the separate account to be distributed or to pay payroll disbursement to all employees. For the example, company A. So company A has a two bank account, which is a public bank and a main bank. Okay. So the company use the public bank as a general activity only. Example, to pay loan bank or pay expenses and also receive cash payment from the customer. But for main bank, they will use only for pay their employee salaries. Okay, now I will explain about Impress Payroll Bank account. First, test of the payroll bank reconciliation. That should take only a few minutes. If there is an Impress payroll account and independent reconciliation of the bank account, such as described for the general account. So basically, the only reconciliation item is outstanding check. So most audit majority of those clear shortly after the check are issued. So in testing the payroll bank account balance, auditor must obtain the best reconciliation, bank confirmation, and also type of a bank statement. Perform the same manners as those described for a general cash. Except that test of the outstanding check are normally limited to a reasonable test. Procedure will attend if the control is indicated of the bank account does not a concern with the general ledger Impress cash balance. Okay, now we will proceed to Objective 6, which is talking about a petty cash. So the petty cash is unique account. So the very conventionally of petty cash also design is most significant with challenge because its cash bar is usually not well secure, reliably tracking access to the money, present and internal control risk. Ensuring that the cash is used correctly require a reconciliation of receipt, review of the cash storage location, and a review the procedure employees use to access the fund. So the audit must be performed regularly. Okay, now we will talking about internal control over petty cash. First, the use of an Impress fund that is the responsibility of one individual. So meet the person we will serve as the normal custodian of the petty cash, usually a secretary or manager. So if no single person is responsible for the petty cash, then consider instituting a policy that identify one person as the petty cash custodian. So bring an audit law which is running tally petty cash totals over time. Okay, next, the control is cannot be mixed with the other activity. So we will be a limit on the amount of any expenditure, and the type expenditure should be defined by company policy. When this basement is made, inadequate internal control require a responsible official approve on petty cash form. Next, internal control over petty cash is actual cash, a check in the fund, and the total and reimbursement. Petty cash form, the represent expenditure should be equal to the total amount of petty cash fund in general ledger. Okay, so a check should be exact amount of the pre-number voucher that are submitted as evidence of actual expenditure. So the last external control is voucher should be verified by account payable clerk that cancel to prevent they are reused. Okay, now we will proceed to the last part, which is audit test for petty cash. So the emphasis in verifying petty cash should be on testing control of petty cash transaction rather than ending balance in the account. So if the amount of the petty cash is small, potential exists for numerous improper transaction if the fund is frequently reimbursed. So when control risk assessed as low and failed investment payment occur during the year, command of the auditor not to test petty cash for reason immaterial. So auditor do test with two most common procedure to determine they are properly supported. So the procedure is to count the petty cash balance. Second, to carry out detailed test of one after the investment transaction. Okay, summary for chapter 23, audit cash balance. We have seen that the transaction is more cycle effect the cash account. So because of the relationship between transaction in several cycle and the ending cash account balance. So the auditor typically with the audit the ending cash balance until result of test of control and substantive test of transaction for all cycles are complete and analyzed. So test of cash balance is normally included test of the very reconciliation of key cash account such as general cash account, impress payroll account, and also impress petty cash fund. So if auditor assess the high likelihood of fraud in the cash, they may perform additional tests such as external bank reconciliation procedure, a proof of cash, and a test interbank transfer. So our end of the chapter 23. Thank you.